right, welcome back to another episode of the Elevated Chat Room. Elevate your mind, elevate your life. Look, we've been off on a little break, you know what I'm saying, Thanksgiving and everything. So we took a little break, but we back. It's your host, Lonzo Jones, my guy, Dwayne Malone, your co-host. Once again, he's in the background doing what he do. We got a special guest with us tonight, but before I introduce her, let me tell you what the topic is. So the topic for tonight is money smarts for real life wins. All right. So we got Miss Jernessa with us. Now, she got a lot of titles, but I'm only going to tell you guys one, and that's a mortgage banker. Now, I'm going to let Jernessa tell you what else about her. Well, tell
them what I do. So I do a lot of things. I call myself a jack of all trades, master of maybe two.
Okay.
No. But I'm a mortgage banker with Global Touch Mortgage. We are based out of Huntsville, very education based, like to teach people about home ownership.
Sweet.
And so I also am a financial coach. So I work for a nonprofit, helping people build and rebuild their credit, which is perfect. So I understand not only the consumer side of credit, but the mortgage side of credit. So a lot of times I'm preparing those clients for home ownership. I'm also an entrepreneur. I have a small business, Clutched Events. So I do event planning, wedding planning, decor, event design, all the things. And I'm a boy mom, a travel ball mom. That deserves a title.
Come on, yes, it does.
Travel ball mom deserves a title. So
that's for sure.
But yeah, that's just a lot of
what I do. You named a whole lot of stuff, right?
I did.
So how do you manage all this? Like time-wise, energy-wise?
It is difficult. Today, even so, I was working my 9-to-5 job, nonprofit, with my headphones in, getting my mortgage CE license education in, and calling, trying to get a loan to close, which we got to clear to close today.
Sweet.
So it's hard. It takes balance. A lot of times just kind of planning through my day, looking at my schedule, figuring out what I can and can't do.
Yeah.
And more importantly, learning how to say no to some stuff so that I can focus on the important things.
So that was real critical what you said. Learning to say no. I remember I was talking to this lady. She was like some type of counselor or a therapist, and we were just having a conversation. Excuse me. We were just having a conversation, thank you. And she said that you got to get to a point in your life where if it's not a heck yeah, then you kind of walk away from it. So if you don't feel it in like, heck yeah, let me do this. She was like, then sometimes that just may not mean you need to be doing it.
For sure.
So learning to say no will definitely save you some peace, give you some peace.
Absolutely.
Now
make room for what you're supposed to be doing.
That's true. So what are you supposed to be doing then?
This is what I'm supposed to be doing. The mortgage stuff.
Yeah.
People always ask me, how do I end up into the things that I'm ended up? And I follow God's grace. And, visions. Like I had a dream and visions of being this mortgage banker. It wasn't anything I desired to do, wanted to do, set out to do. I literally had visions about this and started pursuing it. And took my test, passed first time. I'm like, all righty then.
Wow. So what does it take to be a mortgage broker?
What does it take? So you have to take some pre-licensing education. So that's 20 hours of that.
Okay.
And once you complete that, then you take the national exam. It is not easy. It is a lot of laws, a lot of information. People do not realize how much information is behind that mortgage application that they fill out. But once you complete that and pass, you pay your fees just like everybody else. But the difference between us and a realtor, they can kind of go back whenever. If you do not pass your mortgage license exam on the first time, you got to wait 30 days. After the third time of not passing, you have to wait 6 months.
Wow.
Like they play no games about this side.
Okay, so what? So we're talking about mortgages and stuff. So what actually does a mortgage? You said mortgage banker or mortgage broker?
Well, our official title is mortgage loan originator.
Okay.
So we're originating the loan, so to speak. So we're taking your basic preliminary information based off your income, pulling your credit report, job history, just looking at everything and kind of seeing what your situation is, and then determining at that point of your current state whether you're pre-qualified or qualified for a home loan and for how much.
Okay.
And so, just kind of giving you options of, programs that may be available, giving you the better option. So I work for, let me back up just a little bit. I work for a brokerage. So you have some independent loan companies. I don't want to call out everybody's name, but you have independent loan companies, and then you have brokerage. So we work as a wholesaler.
Gotcha.
So we typically get, like you got a business, you get the wholesale rate, you sell it, and upcharge for a profit. So generally, as a wholesaler, we get better rates. with the investors, so to speak. And we're able to match people to what works best for them. So we currently have probably about 26 different investors that we work with. So what one won't do, another one will.
That's good.
So when I worked for just a independent mortgage broker company, if we didn't have the product to fit the person's need or credit score wasn't what it was, I couldn't do that long. That was it. So now I've got options to be able to match people to what's going to work best for them, and even compare between investors to say, hey, I can get you this rate at this is this. This may cost you a little bit more, but you can get a better rate over here, and then present that to my client for them to choose what's going to work best for them.
Okay, so let me ask you this. You said investors and all this kind of stuff. So do y'all do investment loans for people who do? Like,
we do.
Okay.
We do. So we've got the side that is doing primary residence, and then we also have products for those who are doing investments. Primarily what's called a DSCR, it's a debt service coverage loan. So we do a lot of those. You can be in your personal name, in your business, all of that. Yeah. So we got quite a few options for those.
Yeah. Y'all hearing her. Like,
yeah, we doing it all. Like I got excited. I saw one email and I got to go back and read it, but I thought I saw one of our investors starting to do something with land, because that's one of the things I can't do with land loans.
Okay.
But I try to find somewhere, to send them or refer somebody to whomever. But if I see that pop up, I'm going to be like.
So investors, all you investors out there, real estate investors looking for property. You might want to holler at Jernessa.
Holler at me.
I'm going to holler at Jernessa. You know what I'm saying?
I'm going to find you something. I mean, I've got to tell y'all the magic of, I've got a primary, the loan I've got today, because I'm super proud of it. But this lady found me. I don't know how they found me, honestly. She said the sellers realtor actually put something out there on Facebook. She thought she was reaching out to somebody named Nick, but they sent her the link and I popped up. I don't know.
You look like no Nick.
Christmas miracles, yeah. So lady fills out her information. Her realtor calls me like that Wednesday before Thanksgiving. We're chatting. I'm talking to her. Hey, get your documents in so I can submit you tomorrow. Holiday. Can't do nothing for real. Submit it Friday. Submitted her loan that Friday. Got a same day conditions back. Flipped right back with conditional approval. Called her and was like, hey, let's get on the phone and get your conditions clear. Tell me this, and that we needed letters of explanations for. Got all that done, submitted, ordered her appraisal. She paid for it Friday. They went out and did the appraisal Saturday, had the report back to me on Monday. Like, I don't play. Like, I get on it, I flip. Our processing team is amazing. Like, we work really well together, and I'm very hands-on. A lot of times people are waiting on their processes of other people in the company to do something. I'm on it. I just want your deal to close. So anyway, we did all of those things. She was in a crunch for some stuff because they had already tried to work with another lender. Didn't work out well. So not only are we saving this deal, we got to clear the close in 9 days. And she closing tomorrow.
In 9 days?
She closing on day 10. Right before
Normally it's about...
like 30 days. Yeah. So our company averages a turn time of about 16 days.
What? Where you behind that?
We play no games at Global Touch Mortgage.
Come on. So you ain't said nothing on social media. I ain't even know. Like, I know you was into it, but I didn't know it was like that.
It's like that. So that's why I said I've got to put this out here.
You really do, because
I don't want to be an afterthought. My goal for me in 2025 is to be, people like, oh yeah, I forgot she's a mortgage banker. Like, no, I want you to know, you better call Jernessa.
Yeah.
Call Jernessa. That's the first person you're going to think of. Call Jernessa.
Well, yeah, I got you
super
now
proud.
on
and
speed
it's
dial.
Christmas.
Yes.
It's the holiday season. People off. And so for it to be a slow business time and to flip along that quick. And then that's what she said. I'm so excited. She said, not only did I didn't think that we were going to even be in a home, but to be in a home this quick and before Christmas. She's like, girl, I will forever sing your praises.
Yeah, you on to something. And I'm on to something now too, because I literally just got, you just said it's a DCSR loan?
DSCR.
DSCR loan. Like, I just learned about them probably about a year ago. I'm in the process of closing my first one on the rental property. So that's why I was like, yeah, I'm gonna have to, nah, I'm saying this so you know that I'm doing it. So when I holler at you.
Yes. Well, when I see emails and stuff like that come across. So I have to get your email and be like, if I see some deals or some come through in our email that's a special going on. Because every now and then you'll get like, hey, we're running this, So for example, I had a refi that was sitting up. She wasn't in a hurry. We were trying to find the best deal. And one of our investors had some come through where they were giving 60 basis points for 60 days just because.
Yeah.
But you had to have a 720 plus credit score, which she did. And I'm like, this will fit her better. I was going to put her over here, but this will get her a little bit of a better rate. Let me move her over here. So every now and then, you just kind of have to be aware of those products, those specials, those things that they are going on. And so as I see those now, I can be like, hey, Lonzo, looking for a property? This is what's going on right now. You might slide in on a better deal.
Let me ask you this. Well, let me get you to explain. Okay. You said refi. Tell them what refi means.
So refi is a refinance. So if you currently have a property that you own, if you've got equity built up in it, some people do what's called a streamline just to restructure their payment. Maybe probably they bought in and had a higher interest rate, and so they want to lower their rate, which gets them a better payment, and that's it. They just want a cheaper payment. But some do what's called a cash out refinance, where they are restructuring a loan, different interest rate, maybe higher or lower, but they may need that money that they can pull out. Great opportunity to rid yourself maybe of some debt, but for a lot of people, for them to be able to take that money and now become an investor, such as yourself. So they can pull that equity out, maybe partner with you, somebody, if somebody wants to go in on a deal and buy a piece of property for themselves, then now they have their primary residence, but they're now also an investor. They've got something that's making money for them as well.
Girl, so, you know what you're talking about.
Homeownership is it's a good thing, you build that equity so that you can in turn use it for something else.
Yeah. See, I don't understand why investors don't look at various options and talk to different people in different sectors and positions. Because like I've just linked up with another investor, and I'm just telling him, he's like, bro, I ain't never heard of this stuff. And I'm like, how you've been investing for like longer than me, but he's more old school.
Yeah.
And I was telling him about the cash out refi. And I was like, and he spends cash on his properties. And I'm like, bro, you losing a lot of money. You're not gonna make that money back for 10 to 15 years, if that.
Exactly.
But that's the only way he knows how to do it. So I'm a definitely man, I'm glad you're on the show.
And then what they'll do is the property that you take or you flip or you fix up, probably if you got it for less than nothing, then you do your rehab, you fix it up, whatever the case may be. Then now you get it appraised. It's higher than what you paid for. You take the equity out of it, flip it and do it again.
Come on. So, yeah. Sound like you need to be flipping some too.
I do. I need to be heavier in real estate than I am. So that is the goal. That is the long term.
This is good stuff. And see, I'm real interested in this. So I like this.
We vibing now.
Let's let me ask you this. Okay. What's the biggest misconception about building good credit? The biggest misconception about that?
One of the biggest things from the clients that I've experienced is they feel like they got to have a ton of accounts. So I'll have them come to say, from the credit side, obviously working with them, they'll be like, oh, Mr. Jernessa, I want to open up another account or whatever to help keep building my credit. I'm like, you didn't need another account. You just created a bill. So, you've got a couple of good installment loans, a car loan, a personal loan, a decent credit card or two. That's it.
That's it.
Manage that stuff, pay it on time, and allow it to grow with you. So you've got a car loan, obviously that's a longer term, 4 or 5 years, 6, 7, 8 years now, what they doing. Maybe even a personal loan here or there or not. So that's an installment line of credit that you need. And then credit cards, charge cards are going to be revolving lines of credit. You don't need but a couple of them, because if you find one that grows, you can grow with it. You pay it on time, you manage it well, keep your utilization low, they're going to increase your credit line. And so at that point, I've known people to where they've essentially just grown that credit line to $20,000, $25,000, $30,000, and they pay all of their monthly bills on that. And so then they pay those bills, they get the rewards, the cashback rewards, the miles, they take vacations off of that stuff, and all of that. So it doesn't take a lot. You just need the right things to be able to do that, to boost your credit. So.
Okay. So
quit going out getting all them credit cards.
You heard her.
Quit doing it.
Especially if you're bad at managing credit.
Absolutely.
Debt,
I had one client, she literally had 21 credit cards.
I got a lot of credit cards.
Yeah. But she had 21, they was all maxed out.
Oh, no. None of mine max. Been there, done that, though.
Yeah.
Learn from that.
For some people in business, if you know what you're doing and you're managing it, that's fine. But for the average person, they feel like, I need this card, this card, this card. They get a card for every store that they go to, And if you have cards that, stores that you frequent where you get the rewards and stuff like that. Like when Kyan was younger, I had a Children's Place card, right? I got the coupons all the time. It worked for me at the time. I don't have that card anymore. I don't really go in there. So, find what works for you. But a lot of times, like I said, the misconception is people feel like they have to have that to be able to grow their credit.
Okay.
You just need a few and manage what you got.
So we only need a few. So like Jernessa said, you don't have to go out there and get a whole bunch of credit cards, going to a whole lot of debt. She said you can just create another bill.
It's tempting.
It's very tempting.
It's going to be very tempting, and then you're going to be tempted to use those cards and essentially probably get them to a place of where it's hard for you to afford, and then you in a whole debt trap.
And that's the thing, man. The way the society and everything is set up, you got social media, you got all these people you see just living this lifestyle. It's like, man, how they affording it? And it's like, well, the only way I can do it is credit cards. So you go out there and you run that credit up. Now you got all this extra stress
Got all
on you
these minimum
because,
payments to make.
man,
Some of them, I've got clients, their minimum payments $500 and $600.
jeez,
You know, I cry.
man,
I cry.
woo,
Like what?
it's bondage.
It is. It is so bondage.
But they don't really understand. Like everybody, I'll say their debt tolerance is different.
Absolutely.
You know, but everybody sooner or later will hit that ceiling. And it's like, bro, if you don't figure out something, get a personal loan and consolidate everything, or figure out another way to do it, go make some more money to pay it off. I mean,
right.
flip a house, pay it off.
It.
You
Get
know,
some equity out. Get a cash out refi. Call me. Shameless plug.
So we got you told them what a refi was. Ain't no shameless plug
Ain't
right
no
here.
shame. Proud plug.
Yeah, go ahead and do what you do. Now, how can someone bounce back from a low credit score? So they didn't got 400-500 credit score. How can they bounce back?
I'm gonna say an answer that probably most people wouldn't even think to say, but I'm gonna say budgeting. So a lot of times when we focus on the credit, we focus on the credit. How do I bounce back? A lot of times people don't realize that they got into the situation they're in for the lack of budgeting. So I do a class with a local agency every 12 weeks, and I go, and that is the thing that we focus on the most, because a lot of times we've mismanaged what we're making every month. So then we became reliant on the credit cards. Or we mismanaged what we had every month, and so now I missed a late payment on I missed a car payment, and that impacted my credit because I was late. I mismanaged my money, and I went out to eat with the girls this weekend, and then, you know, I ain't paid that loan payment or that credit card, and they gave me a 30-day late for it, and that impacted my credit. But it was because I was mismanaging the funds that I had monthly. And so a lot of times with the clients that I focus on is because people can go and clean up your credit all day long. Great people out there that do that. But if we don't get to the root of what happened, of why I messed up the credit, you're going to be back in that person's office. Now, they might love to see you.
Oh, yeah.
Right? They making their money.
$1,000 pop.
But you're going to be right back in there. I've had a lot of clients who have filed bankruptcy and probably need to file again, but they're not. Their time ain't up for them to be able to file again, just because they're back into the same situation again. And so I would say for the person with the low credit score is figure out how much it costs you to live every month. Figure out how much you got coming in every month. And if there's a gap in there, figure out what you need to do. Do I need to eliminate some stuff, moderate, cut back on some stuff? Or do I need to just increase my income? A lot of people are dashing and doing different things now, so do I need to pick up a side hustle? Whatever that looks like. But I would encourage them to budget and figure that out so that now when they get back on a place of where they can maybe find extra money to pay off that old debt to get back on their feet, they're now in a place of when they get these new lines of credit, they're balanced enough to pay them on time.
Good. I know people that don't even check their bank account.
Oh yeah, I'm staying mine.
I don't know how you function.
I don't either.
Without checking your account. I mean, on a minimum, at least once a week. You don't even know if somebody done scammed you. You don't know if somebody did some fraudulent activity. You just literally just swiping and living. And it's like, I don't even know how they function. Man, but it don't bother them.
No, I can't do that.
They know they're checked and hit, and they know that they can just go do whatever. It's like,
it must be nice to be that comfortable. And they got plenty of money.
And I think a lot of them, but I also know that most of them do have a lot of debt on their credit card. It's just like they're just living, and then they look up one day, it's like, oh crap, I want to get a house, but I can't because my credit is bad now because I've been maxing out all these credit cards.
Absolutely.
So that's my thing. Like, I don't know how people literally can just get up and go live their life and never balance their account.
Yeah, no, we can't do that. So I have my little system, and what I try to teach my clients is I'm a very visual person, so very hands-on. I ain't gonna say I don't like Excel sheets are not my thing because I'll be more concerned about did I put the number in the right block and it's an equation right for it to add like it's supposed to, and then I'm gonna be like, I'm way off. So I like a basic piece of paper. I literally print off a calendar offline, and it's time for me to do it now because it's December, but I print for the entire year. So I'll print a calendar for the entire year of 2025, and then I do 2 or 3 months at a time, and I'll write down my bills on each day to do, my paydays on those days, and on the back of that sheet I flip it over between my 2 paydays because I know how they're going to file, what needs to come out of that check. So before the check even hit,
come on,
I know who got to be paid and how much is left, and so now I'm figuring out what I got to do with what's left. What can I do with what's left? he got a fee, kid got a fee, I got to get gas, got to get household stuff, and then I work with that. But before I get the check, I already know what I can and can't do.
That's good. I'm the same exact way, but I'm pen and paper. I literally pull out a notebook tablet and I put the stripes down and I do every month. Twice a month because I get paid. Well, I get paid bi-weekly, so some months you get the third check. So I literally the whole year. I know going into like what I need to do with every check, how much is left over, how much I can put back that I know I'm gonna have for Christmas, I'm gonna have for vacations, I'm gonna have for miscellaneous, I'm gonna have for the boys' clothes. Because
you better than me. That's real detail.
Oh yeah, I do it all because I don't like being surprised. I don't like Aiden, he didn't grew out his clothes, so now I gotta buy him a whole summer wardrobe. I got money set aside just for that. You know what I'm saying? Birthdays, stuff like that. So. But that's what makes me feel comfortable. For you, yeah. Because if not, like I said, even the once a year things like car tags.
And that's what I tell my class, like, y'all surprised that school started in August. It started in August last year.
Come on.
You got fees and clothes, Y'all surprised that this car tag due in August. Mine due in August.
Mine is August too.
It was due in August last year. My name ain't changed. So woo,
but that's just how I operate. But I know there's, like you said, there's people that never budget. Then I also have the budget app. And I put money into the app every 2 weeks when I get paid, so I can make sure. Now sometimes I'm under, sometimes I'm over, but I'm trying to keep myself on pace. Another thing that I do, I'll have a certain amount of money that comes out of my check and goes to an account that I don't even have access to. So that way it's like, look, I'm forcing myself to save. It could be $20, $5, $100 a check, but I'll set a number and it's like, look, you don't touch this money.
Yeah,
you don't have access to it.
For sure.
And I only live off my 9 to 5.
That's good.
All my side hustles, that's extra. Yes, that's I'm bringing back up in an investment, or I am. Let's say I put back $1,000 for this vacation. Well, you know what? I done made X amount of dollars. I'm gonna pull a few thousand out of it. We're gonna splurge a little bit on vacation, stuff like that.
Yeah,
but I don't depend on it, and I think sometimes people will go get the side hustle to correct a situation. Then next thing you know, they living off the side hustle money too.
Yeah, and that's what I had to actually do. So with the mortgage stuff, the event stuff is kind of different because I reinvest that a lot to buy, materials for the next event or whatever the case may be. So I don't always see a ton of profit from that. That's just kind of something I love to do.
Yeah.
But with the mortgage stuff, what I found is I was getting that check deposited into my checking account. And I was like, yeah, this ain't a bad idea. After a few, this is a bad idea after a few closings because I was like, baby, I hustled, pull some strings to make this, loan close. And then before you realize it, because like you said, because I don't rely on that because it's commission, here or there, I don't base my life and my bills off of that. So it's all extra money, really.
Yeah.
And I'm like, oh, extra? Look at them boots on. I keep some.
And you can do that though.
Yeah. So what I started having to do is I have a separate savings account instead of credit union. I do have access to it, but I got to drive over there to go get the money out of it. I don't have an app to do it. I don't, I have to go over there and get it out. And so I switched it and started having that mortgage check go to that savings account. So now I got to go drive over there if I want to get it out so that I can start seeing the fruits of the work that I'm doing.
Good. That's good. See, that's smart though.
And you have to know yourself. I tell people, be honest. I'm a spender. My mind does not naturally go to savings. I can talk about this all day long and help people all day long, but I am naturally a spender. If I walk out here today and you say, Jernessa, you was going to get $1,000 when you walk out of here, I'm already thinking, what's in that Amazon cart that I wanted to check out with? So I have to force myself, and you just kind of have to be honest and be aware of who you are so that you can put some things in place so that you can have a little bit put back. Just be transparent. I do like to spend money, but I can't.
I feel you on that. I don't necessarily like to spend money on myself, but I sure spend money on people.
It's just spend,
Like my wife, and she be asking for these crazy gifts for Christmas. Last year she asked for this ice machine. This
the little small.
Yes, and I'm like, I don't know about that. Yeah. And then open up on Christmas, I bought her like a $400-$500 gift. I'm like, I don't even spend that much money on myself. Probably the whole year.
That's okay though.
But I'm like, the boys. But like I said, with me, it's just kind of I just like doing that, I guess. But I will put some back for sure because. And I also do investing different ways, but that's a whole nother podcast.
Podcast.
Yeah, that's a whole nother podcast. You doing any type of investing?
Well, I have just started. That's on my list of 2025 to get
Okay.
more into because my degree was in finance. So I had
Okay.
to do like some of the stocks and all of
Yeah.
that. But when you don't use that stuff, like it completely disappears,
Yeah.
right? And so people think you're supposed to be smart because you got degrees in finance. I'm like, bro, I ain't did that in so long. I don't know, but I have. I've picked up Coinbase app again and started investing in some coins.
Okay.
I trust the word of a couple of prophets, and I believe the word of the Lord, and what's happening and all of that. So I'm diving into that a little bit more to get an understanding, as well as some stocks. I'm trying to understand that all over again.
Yeah.
I know the terminology, but it's not as familiar to me as it used to be.
Well, you definitely can learn a lot on YouTube, TikTok, IG. There's people out there teaching all kind of stuff. So
Oh, for sure.
you can definitely catch back up. My brother's big in the stocks and stuff like that. So he kind of send me stuff. He's like, hey, you may want to look at this, But I do like the old school gold and silver. I'm just waiting for that day for silver to like just really
Just
skyrocket like it's supposed to.
Yeah.
But like I said, that's a whole nother podcast.
I have a girlfriend, shout out to Pooh, that she does a lot of that day trading and all of that. So I kind of follow her with some of the stuff she does.
Yeah.
And, she might post a tip here and there every now and then. And so I try to take advantage of that when I can or whatever. But it's a lot. It's a lot of monitoring. And I honestly, like I said, I'm doing so much. I don't have the time to invest in that like I need to. But it is on my list of 2025 things to educate myself a little bit more in that, to start doing a little bit more investing. Because even if I don't reap the benefits of it, I have a 9-year-old.
Right.
That I want him to have. And we actually have a client that we're working with who he's buying a couple of properties for his son. And so his goal is for him to have the rental income from those properties while he's in college. He ain't got to worry about trying to go make it work in fast food and this and that. He's going to live off of this rental income, go to school, and he already owns property.
Yeah.
So.
There is this thing I've talked about this before. Me and Dwayne have talked about this, but a lot of people don't know. There's this life insurance policy. It's called an IUL,
Yep,
Index Universal Life. Look that up.
I am.
When I tell you, just for $50 a month per kid, it builds cash value so quick. Like when they get 16, if I want to pull money out, I go buy them a car.
Yep.
When they get married, I can help with the wedding. And then when they want to get a house, I can pull money out for a down payment.
Yeah.
And when they retire, they'll have over probably like 500 plus thousand, if not more, of death benefits that'll go to their family.
Wow.
If not more. And then once they hit the age of 65, they can pull it early if they want to, but at age 65, Austin, he will have $72,000 a year until he dies. My oldest boy will have like $64,000 because when I got it, he was a little bit older. But just for $50 each.
Exactly.
But this is the catch. If they want to borrow from it, you don't have to pay it back. It'll just reduce their death payment that would go to their
What they
family.
have going out. Gotcha.
And it's tax free.
And I've seen a lot of people on social media talking about life insurance and pulling the money out of it to even invest. To even go buy properties with and do all of that and different things like that. They like, go get such and such life insurance policy. This and that, the cash value, pull it out, flip it, go get you some property, all of the things.
There's things called infinite banking through life insurance where you become your own bank. Okay. So if you're making a lot of money with your real estate properties and you let's say you get $40,000 and you want to put it somewhere, you put it in a certain type of life insurance policy. The person got to know what they're doing, the agent. But if they know what they're doing, you could put that $40,000 in a life insurance policy. It'll continue to build cash value, and when you're ready to go buy something, you can borrow that money from yourself with like a 3% interest rate.
That's good.
Or
Look that up.
Or thing that I've learned, 0% credit cards. Okay, so you can go get 0% credit cards, and like for me, one time I bought a property. I did a down payment with a 0% credit card. They was like, well, how do you swipe a card for a down payment? There's this company called Plastic. You load your credit card up on there, and they will send the money to the attorney's office you're closing at, the down payment, wire transfer the money. I think the card was, like I said, it was 0% financing. I would only recommend if you do it with a 0% financing.
Yeah, for sure.
So I was flipping a house. So we had to put like $10,000 down. So they put it on this credit card and they charged it. And they do like a little small fee. It's like maybe $300 out of that $10,000. So it was nothing, right?
Yeah.
But my payment while I was rehabbing on a $10,000 credit card that was maxed out almost was like $75 a month because it's 0% financing.
Yeah.
So I only had to pay $75.
Which goes to show how much interest we really paying on these credit cards.
So exactly. Now, another thing that you can do that I've learned is that balance transfers, 0% credit cards. Say if you out there doing something and you know what I'm saying, you done ran this credit card up, but you still got good credit. You can literally either get a personal loan and pay it off, or you can go get you a 0% financing credit card, do a balance transfer. Now you got 0% interest you're paying for the next, they know I'm doing like 18 months.
12 to 18 months, yeah.
So it's like you can really play the game if you really learn this stuff.
For sure. And we just don't know. That's why I said I feel so behind the curve, even, with what bit, little bit I've known. I mean, I feel like I've only kind of grown in the last few years of really understanding some things. So, I said, even if I don't reap the benefit of it all, if I can just set it up for, my son to get it, or whoever else I come encounter with to share, a nugget or two here or there. I'm like, I'm old now. I'm TT over 40, Well, but at the same time, still trying to implement it, what I'm learning as I'm going to see some of the benefit of it, obviously. Yeah. But if nothing else, to build up enough for, my son to get a fresh start.
Yeah, so that's what it's all about, too. Like, we want to find that balance to where we get to enjoy it, too, but also leave enough back for the kids so they're not struggling or working somewhere because of money.
Exactly.
They're working somewhere because of their purpose and their passion.
Absolutely.
And so that kind of, then how it is growing when you get like that early 20s, you're about to graduate and you're trying to get yourself, it's like, you're trying to figure it out. All that fear, anxiety of the unknown. So it's like, well, man, I already got $2,000 coming in because dad did, mom and dad did, blah, 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 blah. So now if I want to be a school teacher and they're only paying $45,000, $50,000, you can do it with no problem.
No problem.
And then you teach them the business. You teach them how to do what you're doing, a side hustle or encourage them to learn another side hustle. So that way money's not a problem. So now you can really just live and bless people and just,
And even adding to that, what you said, just that exposure of telling them, because, a lot of times people, you hear about them inheriting all this wealth and then it's gone because they didn't give them the wisdom to go with it to do what they need to do.
That's good.
And so a lot of times we don't have that from our kids. And that's how we ended up in the financial situations that we are, because our parents didn't have that knowledge to pass down to us,
True.
So I try to expose him as much as I can. We have those conversations. He goes with me to closing sometimes. Sweet. We talk about who the people are in the room and what they're doing. He understands. I give him the understanding of why mommy's working so hard, and this, that, or the other. So we talked about credit. I was trying to tell him, what credit is? He was like, when you give somebody a shout out for what they did, I'm like, not quite. You're right. But I have him in rooms, even being here with me today, the exposure of things, because it was a lot of stuff we learned from trial and error, or we did it wrong, and then we had to figure out how to get it right, and getting out of the hole. So tell your kids, talk to your kids, inform your kids. They don't always have to stay over somebody else's house,
like
bring them and expose them. When I went to the bank and opened up the business bank account, he was right there beside me.
Good.
He might not have had a clue of what was going on, but he was there. He's in rooms that he don't have to worry about. Oh, I've seen this before.
Yeah.
So if nothing else, that exposure is so important.
Yeah. I'll take my kids by some of the properties that I be in, purchase or whatnot. And they'll just be like, well, who house is this? I said, well, it's ours. I was like, but somebody's living there. I'm renting it out, or whatever the case may be, seller finance, whatever it is. Or I'm fixing this one up to flip it. And they'll go in there and be like, I wouldn't live here.
They so used to luxury.
Right.
Ooh,
I'm like, this ain't for you to live in. This is for to bring some money in.
Exactly.
But that's going back to what we talked about earlier, just like how they just got it. How they got it.
So made.
Yeah, they do. It's like, I wouldn't live here. And sometimes I'm going to look at a property to purchase, and you already know.
Ooh, the one you put on social
media. Man. I ain't letting them go in there.
Yeah.
They couldn't go in there.
No, I wouldn't even wanted to go in there.
I literally walked in that that house, and when I opened the door, I felt something fall on my hand. It was roaches. I told you that. They literally fell on. I was like, what? I was like, ooh, wait. I opened the door, the smell hit me. Whew, I had a mask on and everything, lit candles, didn't do nothing. Fleas flying all on me. I was smacking them off. So I walked through there and I FaceTime my wife. I was like, man, I can't clean this. I said, I'm gonna have to find somebody to come do this, because it was bad. I mean, it was feces on the floor.
Yeah, when I was like, what they do to the floor?
But they live like that. They didn't trash it. That is how they actually lived. And like I said, they wasn't rented. It was a seller finance. So I was the bank. The lady gave me $20,000 down as a down payment, non-refundable. And after 2 years,
You just
she just had to leave. She couldn't stay there anymore because she couldn't afford to. Only $900 a month for a 3-bedroom, 2-bath house.
child.
And it was
I can only imagine
nice when she moved in. I ain't no telling where she's at. But that's a journey of an investor. It don't happen too often.
Yeah.
But when it do, it's like, woo!
You got making up for all the times I didn't have to do
For real.
Yeah.
Because you also have to know what to do when those situations come up.
Yeah.
Because I could have sold it as it was and not really made no profit off of it. But I did a cash out refinance. I put like $17,000 back into it. I did a cash out refinance for like $22,000. So I actually made some money.
Off of it,
and then I got somebody in it, $6,000 down payment, $1,425 a month.
Yeah.
And I noticed maybe for 10 years I put them on mine, maybe right at $1,000.
Oh yeah.
So
yeah, it's still a win.
you have to know how to make it work. And that's why I say you have to talk to people.
Yeah.
Because like I said, when I'm a student learning, but one thing I learned is that I'm not just a student that's just learning and being stagnant. I'm learning as I'm going. Like if I make a mistake, I'm like, man, I just right, literally like
do that again.
$10,000 loss. Like,
yeah.
God, dog. Yeah. But hey, it's like as you're growing and you're learning, it's like you know that well next year I'll be able to do this because I learned. I'm gonna build my credit. I got this connection, got that connection. I got contractors. I got this guy. I got this guy say he want to invest with me. I got this guy say he want to invest in me. So it's like, well, look. Everything's looking pretty sweet. Exactly. You just got to stay the path, and of course you got to stay humble too, because you know how that goes.
For sure.
All right, so we talked about budgeting real quick. So what role does budgeting play in achieving financial goals? Because you said budgeting when we talked about credit and things like that. What role does budgeting play in that? Financial goals.
It's huge. I mean, it's like it is the role, you know, because like I mentioned earlier, you kind of learn your habits. You learn not to overspend. You learn what you can and cannot do.
Yeah.
So with that budgeting piece, like I said, as I put in everything I have for the month, I have a transparency, really, an awareness of what's left.
Yeah.
And so that budgeting is get me to a place of where I'm not overspending, I'm not in debt, you know, and all of the things. So I don't think people realize how important that part is. I think it's huge.
I would say I'll agree with you, but think about it like this: every business has a budget.
That's it.
Every business that any business that deals with finances with money has a budget.
Yep.
But we touch money weekly, if not daily. But
we don't have
a budget.
And people want to know that before they invest of what you're doing. What does your business structure look like? You know, and different stuff like that. What's your bottom line? You know, how much are you making? You know, are you going over budget in this area? You know, and stuff like that. So you're absolutely right. Why would we think that it's not essential if you got businesses that have to function off of this? Even nonprofits, y'all have to tell them what you're going to use and what you're using it for. You know, so yeah, people don't realize how that is the thing. I think that, you know, helps from a credit, from home buying, from all of that. Because even from a home buying standpoint, you know, we look at the credit report.
Yeah.
Right? So what we pre-approve you for, we're not including your car insurance.
Come on.
We're not including your daycare. We're not including, you know, you got Pampers to buy. We're not including your cell phone bill. We're looking at what is verified on a credit report.
That's key.
And so, you know, a lot of times people see this number. So I have the conversation with clients actually when I'm pre-approving them of how much do you want to spend a month? Because I can put you on paper that you qualify for $400,000, but you can't afford a $400,000 payment plus the daycare, plus the budget. I mean, you know, plus that. So you kind of have to be aware of what you can and cannot afford. We're going to talk about what else you got to spend because my goal is to get you in the house and keep you in the house. You know, I don't want you foreclosing in a year or 6 months, you know, because you saw your eyes was more than what you really could take on, more than your wallet could take on. So you just have to be aware of what you can afford, what you can do, and just live within your means.
Yeah,
you know?
And that's so hard. It's easy to say it.
It's
you know
so
what I'm saying? I know plenty of people that would. Oh, they pre-approved me for $380,000. I'm gonna go get a $380,000 house.
You want $380,000 house payment?
And I'm like, have you really looked at like you said, like even when me and my wife was getting ready to purchase a house, our second house, and I told her I was like, look, I don't know where you think this money gonna come from. I said we're living in a 3-bedroom, 2-bath. I think we paid like $115,000 for the house, like about 12, 15 years ago, and so it was time for us to upgrade. But I was like, we can't upgrade just because you want to upgrade.
Yeah,
I was like, if
exactly.
you don't increase your money somehow, it's not happening.
Exactly,
So she went and got a master's degree, got promoted, and then I was like, but
Now it's making a little bit more sense.
yeah.
Right.
But see, my thing is this, like, I don't, like you said, I don't want to be house broke, like you was kind of talking about. But I also don't want to not be able to invest in my boys' future. You know, now if I'm strapped because we paying way too much money for a house, now I can't invest for them. Now they gonna have to struggle. You know what I'm saying? Or they just have to wait till mom and dad pass away to get a nice life insurance policy. But I want to be able to bless them as they're living.
Yeah.
When they have grandkids, I want to be there. I want to be helping with the grandkids, doing all kind of stuff. But I don't want it coming as a struggle for me.
Yeah.
Because we purchased a house overspent years ago. No, let's bring it down some. I need this $200 right here cushion so I can put it up, so I can do this and do that and do that. And then as we increase our income, you know, I'll be able to do more. But I was like, but I had to tell, I was like, look, we got to be on the same page.
For sure.
It's all I'm spending.
For sure.
You got to meet me. And she wanted the house,
Yeah,
you know?
yeah. So that was good.
It worked out.
It worked
but
out
you got to talk. You got to have a budget. You got to know what you're doing. Your budget is your foundation.
That's it.
If you don't have a budget, you're not standing on anything.
That's it. That's it.
And you're going to crumble eventually. It may not be, you know what I'm saying, in a year. It may take 10 years. But if you don't have a budget, eventually you're going to wake up and you're going to be in debt, or you're going to be at a place where you can't afford a lot of stuff. So we got to be smart about that. And we're not getting on to y'all.
Yeah. And you just, you have to be aware. You never know what life is going to throw at you. Y'all, my heart was so broken. I had a client I was working with from a credit perspective. She was very, very sound. She had a very good understanding, but she just needed a little bit more structure. You know, she had quite a bit, but she just wanted, just a little bit of oomph, Bless her sweet soul, bought her house, closed, and probably a couple of months in of us talking, she was diagnosed with cancer.
Oh, wow.
So, of course, credit is nowhere near what it used to be because she took a hit from at work, chemo, being off. She had a little bit of a nest egg, to work with or whatever. But at the end of the day, it still seriously impacted her from a financial standpoint. So, you don't want to do so much to where, even in the midst of cancer and her navigating this season of her life, she still has a home. She's still doing enough to maintain, to be able to stay where she at. But, if you get way over here, it makes it even more difficult to be able to do those things. So we just never know what life is going to throw at us. And you just kind of, like you say, have a little bit of cushion or something to be able to do something with.
Yeah.
And even putting that money up so that if life does happen, you got something to sustain you and to maybe benefits kick in, or whatever that looks like.
That's good. That's good. Like you said, we don't control what the future looks like in a lot of different areas, but we just have to trust in the grace of God, and no matter what happens, that He'll see us through, carry us through.
For sure.
And so you do have to prepare, for the future, but at the same time, you
can't be fearful of
right,
it.
Right, and don't.
I'm not telling you to be fearful, but prepare. Yeah.
I like that. What advice would you give first-time home buyers? What advice would you give them?
There can be another house. If I have not another regret, it is that I did not buy in that 2020 phenomenon. I wanted what I wanted. Bougie. Not trying to be bougie. And what I wanted to pay for, I knew where I wanted to stay from a payment to be comfortable. But at the same time, it was kind of like, that's not working for me. That closet's not big enough. Petty stuff, right? And so I missed out on the phenomena of what COVID offered, a lot of people. And so kind of we are still in our apartment. We have totally outgrown that, but obviously we understand where the market is now, and it's different. So the house that I was looking at then is like, ain't no way I'd pay that much for that now.
It's totally different.
And so I know that there'll be another house. Don't feel like you're going to get it all in the first house.
That's good.
Because there can be another house. Also, I would tell them to go to work. Mortgage math is different. So, you have people that we do wonderful mortgage math to determine how, you may tell me you're working 40 hours, but we're going to look at your year-to-date numbers and do some mortgage math and add and divide, and you've been going home early. And I can only give you credit for 35 hours. that could make a huge difference in you getting pre-approved because your income is not sufficient enough to, for that debt to income ratio. Yeah. So a lot of people, if you're getting close to that home by this and that, stay your tail at work because, you get lax. You're like, oh, I'm going home every Friday, this and that because you can or you're comfortable, whatever the case. Stay at work because mortgage math, we have to figure out what we can give you credit for. I'd also tell them don't change jobs in the middle of all this. You'd be surprised that people, they do weird stuff when it's time to buy a home. Don't change jobs. If you've been in a job consistently for a period of time, like if you've been there 2 years and you get overtime, I can give you credit for that overtime by balancing and averaging out your W-2s. If you leave there and go get another job where you're not getting it or maybe not as much, you kind of lose that.
Gotcha.
And sometimes that extra income is what you need to kind of get you where you need to be or even to qualify at all. And so, I've had clients that's like, well, I was entertaining the opportunity to go to another job. Chill out. Stay where you at before you leave. And also one of those things is even with that job, they do a final verification literally days before you close.
Yeah, I've heard about that.
And people beating left. I haven't had that happen. I coach my client. I be like, hey, don't do nothing crazy. Don't move no money. Don't do nothing silly. But don't leave your job in the middle of this process. Don't. Because even if you do, and I have some people that tell me that, and I'm like, well, if you're gonna leave, you need to leave now because I have to have 30 days worth of pay stubs. So you're gonna have to be at this job at least a month before you can even come back and try to do this again because we have to verify that you've been at that job 30 days.
Yeah.
So those are the biggest things. And let me add, if I'm going to add. No,
go ahead.
Buying a house ain't free.
Okay.
So you have all of these incentives that people are throwing out, these builders with $15K your way, $20K your way.
Yeah.
People telling you their story of, I walked away from the closing table and I didn't have to pay $1. It costs you somewhere. Yeah. That money is not free. It is not free. They have hidden it probably in another fee that you don't know anything about. One line item, they've increased what it normally is. Even for some of the programs and like down payment assistance programs and stuff like that, they come with the cost. Your rate is going to be higher. The cost of doing business and the investors in the market, they manage and they monitor how well this down payment assistance program is working. Do we have a high default rate when we're doing certain things or we have certain thresholds or criteria for this down payment assistance? If they realize it is, they changing it up and they're making it more expensive for you to do it. So you may have a loan officer who is just trying to close a deal and get you in a house and they're not explaining this to you. All you know is I got a house. I'm a homeowner.
Yeah.
Sweetheart, they ran the check up on you, literally.
Yeah.
And you don't even know it. All you know is you got a house. So, a lot of times people have that misconception of, oh, it's great, I walk away from the table. Just know it costs you somewhere. You just don't know where it costs you at. And to have a little bit of money available, there are fees and things that have to be paid for out of pocket up front. Your credit report fee, appraisal, earnest money. Your realtor's going to recommend a home inspection. So you're looking at maybe $1,500, $2,000 out of pocket. Now you get credit for it on the back end, but you're going to need that to kind of start the process. Yeah. So I know a lot of times people think and they see all this and come get a house, 2.99% interest rate and $15K from the builder, and and da-da-da-da-da-da. Something else is hidden off in there that you don't know. They done jacked up the price of the house. It's not free money. Gotcha. It's just not. But do I think it's a great way to get people in the house? Absolutely, if they can. And you figure out and you refi, come back and do whatever you need to do. But don't at all think it's free. Nobody just giving you $20,000.
Unless you getting a VA loan.
No, yeah.
So what percentage do you guys normally request for a down payment on the first-time home buyer, and then just
by guidelines. I mean, so we have FHA, VA, conventional guidelines. So FHA is going to be your 3.5%.
Okay.
Conventional is going to be your 3% sometimes for a home buyer. First-time home buyer, generally it's going to be about 5%. It's more of what I call the bougie loan. But sellers love a conventional because the appraisal is different for a conventional versus a government loan. But it's going to be the typical things with your USDA. There is no down payment, so it's 100% financing. You still have your closing costs. It's going to be attached to the loan. But it's just based off guidelines.
Okay.
And we have some investors have programs that they run at certain times where they may waive that or lessen that or have a grant to meet you halfway. Like we've got one investor that was doing 1%. So the client paid 1%, they paid the other 2.5% in a grant form. But that's just if they're running that program at that time. So.
And USDA loan, that is in the
rural.
Okay.
Yeah. So there are a few qualifications for that. So you got two parts. You got property and income requirements for that. So the property has to be within that quote unquote rural area. For us here locally, even in Florence, it could be in Petersville.
Okay.
For even people in Killen, I know there's one girl, she bought one side of the house was zoned for Florence, the other side of the street was, one side of the street was zoned for Florence, the other side of the street was zoned for Killen.
Yeah.
So it can still be quote unquote within city limits, so to speak. You ain't gotta be out there with the cows in the pasture necessarily. So you have that part, but you also have an income guideline that you have to meet with USDA as well.
Okay.
And they, even though you may have one person on the loan, they're gonna count the total income of the household.
Okay.
So you may just be on the loan, but if your wife is also going to be staying in the house, they're going to count her income too.
Okay.
Even though she's not on the loan. So if you don't meet that, you still can't do USDA. So there's another guguideline to that.
I didn't know that. That's new to me. Okay.
Mm-hmm. And so they've got all those numbers published out there, what that's like. I think an average family of four is maybe 100, little over 100,000, 104, 110, something like that or whatever. So if you're under that, you're fine. But I mean, if you don't think you're going to have your other person in the house be like, oh, we're going to go this way and get this and this and that. No, they want to know everybody's income that's in the household.
Okay. You was talking about purchasing a home during the pandemic. Mm-hmm. That's when me and my wife got our home that we're in now.
Phenomenal. Never happened again.
and you know what? It was all God. God. But so during that time, the interest rate was like less than 2. Mm-hmm. And like you was talking about the house that you wanted then, if you look at it now, you couldn't afford it. Mm-hmm. The house that we're living in now, with the interest rate that we got back then and what we paid for it, if it was on the market today, we wouldn't even look at it because it's too high.
Exactly.
The houses have went up probably like $175,000 and the interest rate is about 4% higher.
Yep.
And I'm like, there's no way.
Y'all better not ever move.
No, I'm not.
No, we gonna be forever.
So that's why when you said that, it just took me back to that. Let me ask you this though. You said you spoke about credit cards and not running them up. What is the utilization level that they should keep it under?
So standard, they tell you 30% or less. Okay. So hypothetically, $1,000 credit card, over 300% reporting.
Okay.
So I work with my clients because a lot of them are new to credit cards. I keep them baby still small. So I honestly try to keep them under 10%. And the ones who really get it, we report 1 to 3%.
Okay.
Every month. And that is the reporting. So there's a difference between your statement date and your due date. So, the due date is obviously when the minimum payment or pay in full, but their statement date is when they report their balance. So I teach them that enough to know so that on that statement date, their balance is 1 to 3% or 10% or wherever, depending on where they're at. So depends on how much understanding they have, and where they want to be or where we go. Some of them are fearful of credit cards, obviously, so we just try to keep them small. But standard is 30%.
Okay.
On that.
Let me ask you this. How does reporting from a credit card differ from reporting from a personal loan?
In regards to?
Let's say this. Okay. Let's say a guy was running his credit card up and he's pretty much maxed it out. But he goes get a personal loan, takes that loan, pay that credit card off. Now it shows a zero balance. Now he shows an installment loan. Yeah. How's that going to help the credit?
So credit card utilization is 30% of your credit score, like a third. So that is a lot. So a lot of times I recommend, and I've personally done this myself, have gotten a credit card, personal loan to clear out those credit cards. It's going to boost your score up. And typically your payment is going to be less. So you've got that installment loan where now you may be paying $200 a month, where individually for these credit cards, what you were paying collectively might have been $345. So you're going to save a little bit of money. Typically, the interest rate is typically going to be lower too. So you got an installment loan where right now your rate might be 8-10% still. But on that credit card, you got 29+%. So you're still paying less interest over the life of the loan. You possibly have less monthly payment that you got to pay. So you can now use it and invest, put it in your savings account. But even still, you're going to get the benefit of your utilization being under that 30, that 10, that 1%. And so you're going to see a skyrocket in your score.
That's a cheat code. Just so y'all know.
It is a cheat code.
That's a
It
cheat.
really is.
But it's only a cheat code if you're not gonna run no credit cards
If you're
back
not
up.
gonna run them back up. If you're not gonna run them back up. Don't
If
do
you
it.
have no discipline, it's
You gonna be
pointless.
Like, ooh, I cleared that line. Let me run the check back up.
But she just gave y'all a cheat code. Like it's ways to maneuver this credit game once you truly learn it and you start talking to the right people that has done it, has made the mistakes, and that's willing to share with you. Oh yeah. Oh yeah. I mean, it's because growing up, nobody taught us about finances and budgeting. Yeah. I did that on my own when I think I was reading something, watching a video about budgeting, and I was trying to figure out how am I going to survive working at Walmart when I'm in college. So I literally pen and paper, boom, wrote it out. Man, I was like, oh, I got more money than I thought. I've been blowing money. I've been blowing $100. Like, where does $100 been going? So once I did that, I was like, okay, well, I need to give me a side hustle. So I started selling Avon. Then I started selling life insurance policies.
I didn't know that.
I had to make money on the side. I'm trying to figure it out. Man, I got some in my bag. Especially for the wintertime.
That kid's on top for Avon.
That is true, though. So
that's good.
We, like I said, budgeting really kind of, because even when I met my wife, we was in college, and she was like, I've never met a college student that has a budget. Well, I was like, I don't know how to function without a budget. You know, so when you ask me, can I do this or can I do that? Like, no, I can't. And this is why. But like I said, it just helped me. So the more money I made, it was easier for me to kind of budget it. But like I said, I probably am a little bit more detailed and over the top than the average person. Like I said, I'll write my budget out for the whole year. I would sit down and every paycheck, you know, and even income tax. So I already know, like, okay, if I get income tax back this year, if it's about the same as it was last year, then I already know what I'm going to do with that money. You know, so just little different things like that, man. But even with me doing it, I still make mistakes. Yeah, I still will overspend in the area. I still like, well, you know what? Just like my wife, and it's always for the family. It ain't never for something I want to do, right? So
ain't no new kids in there.
No. If it is to come off DH Gate, I'm spending $55 on some shoes. You feel me? These right here. These DH Gate, but you don't know. I just put a plug in for DH Gate. Y'all gonna look it up. But like we going to New York in the 3rd through the 5th, like an overnight 2-night weekend trip getaway. I would have never done that. Yeah. But she was like, well, so-and-so said they gonna go, and his husband going, her husband going, and he said he wants you to go. And I was like, well, I guess I would go then. But I was not, it's like, I could put that money, the money could have been put up. You know what I'm saying? But I'm living. But don't, but it's just like stuff like that. I'm like, man, come on. That wasn't in the budget.
She done rubbed it the wrong way.
So, now let me ask you this last question here.
Okay.
All right. So how do small financial changes lead to big wins over time?
It creates habits, you know, so you get into the habit of the things, and it eventually kind of becomes almost a lifestyle for you. So, you know, a lot of times I'll be out in the store. I remember I used to just love to go to the store and pick up stuff, whatever. And then it got to a point where I was like, I don't need that. By the time I get to the counter to check out, I might have one thing, you know, because I'm thinking you really don't need that, or think it through. Can I find it cheaper? I might be in the store like, you go on Amazon and see if I can find this, you know, or whatever. And so you just create small habits. So it's like you pay off that small bill and you're like, never paid an account off in full and early. Let me try something else. Talent in something else. You know, let me do the bird man. Let me try my talent in something else. And so you start to you know, it becomes a little bit of habitual for you. And then also, you know, it just starts to build your confidence, you know, in yourself and your ability to manage your finances well. You know, do things as more comes. You feel more confident in being able to do that, you know, and all of the things. So it's just good. You know, the small wins, don't discredit the small beginnings. Don't discredit the small things, and give yourself credit for those small wins. I have a lot of clients that they'll save money and and it never fails. Whenever you start working on your credit, stuff gonna happen. Like, it's just gonna happen. Yeah. And so I'll have clients that'll be like, well, I finally got some money in savings and then my car broke down. I said, but you had the money to get your car fixed. Yeah. You know? And so I said, you didn't have that last time, right? They were like, no. And I said, and what happened? This, and I had to get a ride, and I was late for work, and this, and that. I said, but this time you were able to get your car fixed, and you went right on to work, and you kept going. Give yourself a pat on the back for that.
And that's good, because you talking to me about that, because I'm like, man, I should have this, and that. But I spent money on this vacation. I did this and that, and I could have. And it's like, well, no, you still
You got memories.
Yeah.
You know, we had a good time.
Yeah.
We laughed a little. Y'all, something probably happened that y'all gonna keep joking about. It's gonna be an inside joke for 5 years, and it's gonna always be funny.
I'm looking forward to doing it though, but it was just like, you know. Then it was Christmas time. We doing this, and talk about travel baseball. My oldest boy, he didn't join the East Coast, the East Cobb Astros, the East Cobb Astros organization around here. We just had a fitting the other day. They had a fitting. We had to buy, and the parents didn't agree to buy new baseball bags, helmets, and we know you got to buy the whole uniform. So you talking about, I'll say easily $500. Mm-hmm. Just like that, out of nowhere.
I believe it.
So it's like, So, and you talking
that's
about.
why I put that as a title, travel baseball ball, because people, I remember putting it on Facebook, British and they're like, you need a kit. Like, these people play no games out here. It's expensive.
It does, but I love it though.
It's fun.
I love it.
I enjoy it.
Even if it be 100 degrees out there, we still out there cheering. I got
screaming.
20 shades darker with a tube sock
got
tan
my
line.
Publix grapes and watermelon out there munching my little butt up. So.
You wanna tell the audience where they can reach you at, contact you concerning anything that you can help them with?
Sure. So mortgage banking. My phone number is on social media. Sorry, that camera. 256-710-8310. You give me a call. Our website, Global Touch Mortgage. You can also find me on Facebook, Jernessa Jones. I also have a mortgage bank page. It's Jernessa Jones, NMLS 210-6125. That NMLS number is like our mortgage social security number. It identifies us. So you can find me there on social media. And then from the Operation Hope from the credit standpoint, that number for that is 256-415-6907. And then my email address is my name, Jernessa, JERNESSA .Jones, JONES @operationhope. It's all one word .org.
Sweet. Man, Miss Jernessa Jones has come through tonight and educated us in the credit game and the mortgage game. I got to clap for you.
Thank
you. You were awesome tonight. I appreciate you coming through. Like really, man. Like you have blessed us tremendously.
Well, bless God.
So don't take it light. Hopefully there's at least one person that's gonna come across this episode that's gonna touch them in a way to where they feel like they can get their credit up, or they can buy their first house, or they can start investing in a proper, or they will actually start budgeting to correct some things in their life. So that's going to be the end of the episode. The Elevated Chat Room. We are checking out. Elevate your mind, elevate your life. We out. You guys be blessed.